Stop, whatever you are doing right now. Stop, because in the next 5 minutes I am going to show you something that every single silver investor on this planet needs to understand before tomorrow morning opens. And I am not saying that to get your attention. I am saying that because today, February 26th, 2026, something happened that changes the entire silver story going forward. And if you close this video right now, you will wake up tomorrow not knowing why your silver did what it did today. And that feeling of not knowing is the most expensive feeling in investing. 2. So stay with me, because this one is important. Right now, as you sit there watching this, two of the most powerful forces in the world collided today simultaneously, and silver got caught right in the middle. Force number 1. American and Iranian officials sat across a table from each other today in Geneva, Switzerland. Two U.S. Navy aircraft carrier groups positioned within striking distance of Iranian soil. The world's top diplomats walked into that room calling it the last chance to avoid war. Steve Witkoff on one side, Aragchi on the other. The entire precious metals market held its breath waiting for the outcome. Force number 2. Donald Trump's 50% tariff on metals under Section 232 is actively squeezing the physical silver supply chain right now today, not tomorrow, not next month, today. And almost nobody in the silver community is connecting these two events together and telling you what they actually mean for your money. I am going to tell you exactly what happened in Geneva today. I am going to tell you exactly what the tariff crisis means for your silver going forward. And I am going to give you the one price target that every serious analyst is now pointing to after today's events. 8 minutes. Stay with me. Let me set the stage first, because context is everything, and most channels skip this part entirely. 12 months ago, silver was sitting at $29 an ounce. $29. Today it is $87.50. That is a 200% gain in 12 months. Let that number breathe for a second. 200% in 1 year. But here is the part of the story that most people only half understand. Silver exploded to $121 on January 29th, an all-time record in human history. Then within 2 weeks, it crashed 50%, all the way down to $70. Investors were panicking. Everyone said the bull run was finished. The headlines were brutal. But then something happened quietly, something the mainstream financial media completely missed. It started climbing again. 72, 78, 82, 86, 91, 6 days, 40% recovery from the bottom. And then today happened. Silver pulled back to $87.50, down 1% from yesterday's $88.38. And right now, sitting at home watching this, your first question is simple and completely understandable. Is this pullback the beginning of another crash, or is it something else entirely? That answer was decided today in Geneva, and what happened in that room is not what anyone expected. Here is the truth about the Geneva talks today that nobody else is telling you straight. There was no deal, but it was not a failure either, and that distinction matters enormously for your silver. Iran's key advisor to the supreme leader confirmed today that an immediate agreement could be within reach, but only under very specific conditions. Iran refused to end uranium enrichment. Iran refused to negotiate limits on its ballistic missiles, and U.S. officials speaking privately confirmed that discussions are close to an impasse. Close to an impasse, not at impasse, not collapsed, not failed completely. Close. Do you understand what that means for silver right now? It means the war premium did not disappear today, the fear did not leave the market, but the hope of a quick deal also did not arrive. Silver is sitting in this exact middle zone of maximum uncertainty. And maximum uncertainty in geopolitics, historically, does one thing to safe haven assets. It holds them elevated. It keeps the floor underneath them. The drop from 91 to 87 today was not panic. It was profit-taking on the deal, hope that did not materialize. And that is a completely different thing. Profit-taking is healthy, panic selling is dangerous. What happened today was healthy. And here is the twist that is going to reframe everything you just heard. Even if Geneva talks completely collapse next week, even if a deal is announced tomorrow, there is a second force working underneath silver's price right now that is completely independent of Iran, completely independent of geopolitics. And it is the force that every serious analyst says will drive silver higher over the next 6 to 12 months, regardless of what happens in any negotiation room anywhere in the world. Trump's 50% metal tariff. Let me make this real for you in plain language. Silver does not just exist in one place. It moves across borders constantly. It gets refined in one country, shipped to another, processed in a third. Mexico, Peru, and China are the world's top silver-producing nations. When you place a 50% tariff on metals entering the United States, you do not just slow down trade. You fracture the entire physical supply chain. JP Morgan's own strategist warned this week that tariff pressure is creating what he called tight physical liquidity. That is, banker language for silver is becoming harder to get and more expensive everywhere simultaneously. Not just in America, everywhere the supply chain touches. And here is the number that makes this tariff story even more powerful. 429 million ounces of silver demanded globally right now. Only 103 million ounces of physical supply available. That gap existed before the tariffs. The tariffs are making that gap wider every single week. So when you combine a geopolitical situation that is not resolved with a physical supply crisis that is actively getting worse, the question is not whether silver goes higher. The question is only how fast. Now let me give you the analyst targets, because I want you to hear these numbers not as YouTube hype, but as real published research from real institutions. David Hunter, respected macro strategist, published his target this week. Silver at $180, gold at $6,800. Timeline, second quarter of 2026. That is April, May, June. We are in late February right now, but that is not the number that made me stop and read the research 3 times. Rashad Hajiev, senior commodity analyst, published a full mathematical model this week. His model tracks the gold-silver ratio, which is currently sitting at 59.2. In 2011, that ratio compressed all the way down to 30. His model shows that if the ratio compresses back to 30 at current gold prices, silver does not go to 100. Silver does not go to 150. Silver goes to $250 mathematically. $250. I know exactly what just happened in your brain. The same thing that happened in mine when I first read that number. You thought that is insane. That is clickbait. That is some YouTuber making up numbers. So let me give you one fact that grounds this completely. 1 year ago, the analysts saying silver would hit $100 were called insane. Clickbait. YouTube hype. Silver was at $29. Those same analysts are now looking like geniuses. And silver at $87 is real money in real portfolios right now. One price algorithm published this week projects $107 silver by March 3rd. That is 5 days from today. And underneath all of this, there is the 40-year structural story that is the foundation of everything. Silver broke out of a 40-year cup and handle formation in 2025, the $50 level held as a ceiling since 1980, 45 years of resistance. When silver broke through that ceiling, the technical measured target from that single pattern put silver above $300. The exact same pattern triggered in 1993 and produced a 747% rally over the following years. Same pattern, same structure, happening again right now in 2026. So let me bring this entire picture together for you right now, because this is the part that matters most. You now know 4 things that most silver investors watching YouTube tonight simply do not know. Silver's drop to $87 today was profit-taking, not panic. The Geneva talks are at impasse, not collapsed, which means the war premium stays in silver's price. Trump's 50% metal tariff is creating a supply squeeze completely independent of geopolitics. And every major structural indicator, from analyst targets to 40-year chart patterns to the physical supply deficit, is pointing to significantly higher silver prices. Here is exactly what I would do personally if I held silver right now. I would not sell this pullback. Not even close. The $85 to $88 zone is the exact level where serious buyers accumulate, not where they run. If Geneva talks fall apart completely next week, silver could hit $100 before any of us have time to react. If a deal somehow gets announced, treat any drop to 75 to 78 as the single best buying opportunity of 2026. Either scenario gives you an entry or a hold signal. There is no panic scenario here if you understand what is actually driving this market. Look, I want to be honest with you for a moment before I close this video. I started this channel because when I first bought silver, I had nobody explaining this to me. Nobody told me about the 40-year pattern. Nobody connected tariffs to physical supply. Nobody broke down what geopolitical impasse actually means for safe haven pricing. I was just watching the price go up and down, feeling anxious and confused every single day. I do not want that for you. Silver at $87 today is not the end of this story. Based on everything we covered tonight, the supply deficit, the tariff squeeze, the Geneva impasse, the analyst targets, and the 40-year structural breakout, This price may look incredibly cheap before the end of this year, but you need to stay informed every single week, because this market is moving faster than any point in the last 45 years. If this video gave you one thing you did not know before you pressed play, hit the like button right now. It takes 1 second. Subscribe for weekly silver alerts, because next week the Geneva story will have developed further, and I will have the complete breakdown ready for you the moment it does. The talks are still unresolved. The tariffs are still in place. The deficit is still growing. And silver is sitting at $87 waiting for its next move. Now you know exactly what to watch for. The next move is yours.